Good morning. My name is Chris Fox, and today we're talking about the potential tax advantages of your author business. So, being an author means that you're a business owner, and that sort of changes things. And I want to talk about that. Now, this is going to be at a really basic level. So, if you're an advanced authorpreneur, you're not going to pick up any secrets that you don't already know. But if you're a new author who is aspiring to do this full time, or thinking, you know what, I wonder what it's like to be an author for a living, there's lots of stuff to know about. But one of the biggest mental shifts for me came in how I think about money. So when you were a wage earner, in other words, you work for somebody else and they either pay you a fixed amount every month, or maybe you get a per hour dollar amount, so you get $25 an hour, and the more hours you work, the more you get paid. Whether it's a salary or an hourly amount, someone is paying you externally, and then of course once you have that money, you start paying it. And that's for everything from bills to your car payment, to your food, to anything you purchase. Money is just money. And that was always the way that I thought about it. And occasionally someone would mention something like a 401k or an IRA, where there were some tax advantages, but it wasn't really clear to me how that worked. Just that I might, save a little bit of money, like maybe some of the taxes that were going to Uncle Sam would instead go into my pocket. But I didn't really get what that meant. Well, now that I run a business, I do. Whenever you earn a dollar, if you don't spend that dollar, roughly 40% of it is your typical business owner. And it can vary depending on where you live or what your taxes are like. Maybe they'll be different next year. Who knows? But as it stands right now for me, for the last few years, if I have a dollar left over at the end of the year, I'm probably going to give about 40 cents of that dollar to the government. So it behooves me to spend that money in ways that are intelligent for my business. If my business needs something and I purchase it, then I'm not giving that tax money to the government. It's incentive for us to spend the money rather than sit on it. Instead of being cash rich, you're going to take that capital and you're going to invest it. And if you're a large company, you are investing in big parts of the economy that can do big things and create lots of jobs. And even at the small scale, as an author of my size, it can mean creating some at least part-time jobs. I need an editor, and I need somebody that's now managing my ads, and somebody else that is managing my mailing swaps. And there are lots of things that I need done that require me to transfer money to other people. Well, every time I'm paying somebody like that, like let's say I make $10,000 in books, and I'm now spending that money to pay people to do things for me. If I spend all $10,000 in ways that the IRS approves of, and in things like covers and editing and paying other people to do things for my business, and my cell phone bill, if my cell phone is relevant to my author business, which mine very much is, then you can write these things off and make the business pay for it. And anything the business pays for is money in your pocket. So if I have to pay for insurance out of pocket, it comes out of my pocket directly after I've been taxed on that money, then it's going to cost me $800 to pay like $500 worth of insurance. Whereas if the business pays it with $500, not the $800. So you want to make your business pay for pretty much everything that you can legally do so. Now, my tolerance for risk is very, very, very low. I don't like writing things off that are any sort of risk or could come back to haunt me if the IRS is, it performs an audit and wants to see my back taxes. I don't want to have to worry about things. And so I'm somewhat careful when I write off, and I would encourage you to do the same thing. Speak to a tax professional, in some cases multiples. Just because you've spoken to a CPA doesn't mean that CPA knows everything there is to know. So, I check in with the author community as well. Hey guys, this is what I'm doing. Do you think that this makes sense? And I try to get second and third opinions to make sure that I'm doing the correct things. As an example, perhaps the most contentious thing that I wrote off, and I actually made a thread on Reddit very recently, and it caused some waves in the community, and I got accused of being a liar and walking things back. And the crux of it was, I said I wrote off part of my honeymoon so that I could go to Hawaii to study volcanoes. And on the surface, that's a very heavily laden statement. It implies that I'm doing something that the IRS almost certainly would not be okay with. If you're trying to cloak a personal trip under the guise of, I'm doing research, then you're in trouble. You're going to be in trouble, and if you get audited, there's an issue. But there is a way you can do this. So bear in mind, this is my honeymoon. Now, the way that I structured it, the first week, we flew to the Big Island. And the second week, we flew to Maui. On the Big Island, I was investigating lava, ancient Hawaiian cultural sites. I was learning their history, their flora, their fauna. We went snorkeling. There were things that I was doing to learn how to write this island and their people. And I integrated it into 2 different series of mine. The Deathless series and Project Solaris. So Project Solaris, book 3, it's called Hero Dark, actually takes place in Hawaii. It's literally set there on the island where I was doing this research. So when I was planning my trip and I looked at this, I said to my CPA, listen, CPA, I don't want to piss off the IRS, and half of this trip is going to be my honeymoon. Should I just not write any of it off and do the things I need to do? Or how much of this is safe and why? And what my CPA told me is that intent matters. Clearly, I'm doing some research and some of it's legitimate. And so I wrote 50% of a lot of expenses off. 50% of my airline ticket, some of the car rental, meals if it was doing something that on that day that was relevant to the research, the hotel stay on the island where I was doing the research. All that stuff was either 100% written off or partially written off. So if I thought I was using it partially to do personal stuff, like, oh, I got it for research, but you know what? I really also did a lot of, fun stuff here, and Lisa and I went out dancing or whatever it was. I reduced the percentage that I was going to write off because I wanted to make sure that I wasn't shortchanging the IRS. So it's really important that we as authors, you get the tax help that you need, either a tax attorney or a CPA or both. And I would advise you, nothing I'm saying should serve as tax advice or should convince you to do anything with your own personal taxes. That should be on you. But you should take a look at every dime that you spend and figure out whether or not it can be written off as taxes. So for example, for me, where you hear this video being recorded is in a freestanding structure. It's a pool house, and it's outside of my main house. And I use this as my office. The only thing that happens out here is work. I record videos, I write novels, and if you look around my office, you'll see a bunch of recording equipment and stuff. I mean, it's obvious that this is used for business. And so my accountant advised me, okay, Chris, you can write off that square footage as part of your rent. So basically, my business, before tax dollars are taken out, pays roughly 10% of my rent, because that happens to be the size of the place that I'm living in. If it was a smaller office, I'd probably pay less, but it happens to be a big office, and the business is footing the bill for that. In my case, I don't use the phone for anything personal related. I mean, no one born in this millennium uses the phone for anything personal related, so that's hardly surprising. But I do use the phone, and when I have to use it, it's for author stuff. It's a business expense. That is the only reason I really have to have a phone. I could get by without having a phone at all, and I could just use my computer and like an iPad if I wanted to. And so I write off my phone bill because that's where that's being used. And I, again, discussed that with my accountant. Now, if I also used my phone for personal purposes, I probably wouldn't have written off 100% of the phone bill. I might have said, you know what, maybe 50% feels fair. Like, it's half mine and it's half the business, and so I'm only giving myself a tax credit for that percentage. So you kind of get to sit down with your accountant and discuss, okay, what should I be doing for my situation? But if you do it right, then you're writing off everything that you legally can with your business. And again, you want to purchase everything you possibly can with your business. It makes your salary look low and it makes your profit look low, and that's fine because your lifestyle and your business's purchasing power are higher as a result of using it as the vehicle that it really is. A business is in some ways a tax vehicle because you get to make choices that you're spending your money in certain ways. If your business decides that you need an iPad or a computer for some reason, you can legitimately prove that's something you need for your business, then you can purchase that with pre-tax dollars. If you want to buy your nephew an iPad for their graduation and you're purchasing that with post-tax dollars and you spend, let's say, $1,000 on an iPad, that actually works out to closer to $1,500 once the tax situation is examined. It's much more expensive to buy things with post-tax dollars. And so you as an author want to get into the mindset of what you can write off and what you can't. And that starts with simple tracking. So all you need to do is set up a simple system like, I'm trying to think of what might work. I can't think of any options but QuickBooks. QuickBooks is pretty much the industry standard for everybody that I've talked to. I don't know of another option. You can certainly track it yourself with spreadsheets if you'd prefer. But the advantage of something like QuickBooks is it'll integrate with your bank accounts and it'll suck those those financial records in so that you can actually populate it very quickly and you don't have to do very much work to look at your finances. And then if you are working with a tax professional, which, repeat after me, I will hire a CPA. I will hire a CPA. Make sure you're doing that. Make sure you're talking to a tax professional, and then you're using a system like QuickBooks. They'll show you how to make it super easy. So the goal is at the end of every year to have paid Uncle Sam what Uncle Sam is legally owed and no more. To make sure that you're writing off everything that you can write off, to make sure that your tax situation is structured as it should be. So for example, I've incorporated. I'm now a corporation. Chris Fox Writes is an S corporation, taxes an LLC. And I may have said that backward. But you know what? That's not our job as an author even to know if I did say it backwards. Honestly. That's more about the attorneys and the accountants that I am consulting to make sure that my tax situation makes sense at any given time. We as authors, it's not really your job to understand it. And if you can, great. But knowing the basics of find a tax professional that you trust, get a second opinion to make sure that the first person that you're trusting knows what they're talking about, and then write off all the stuff that you should be able to do. If you were flying to NINC, for example, in Florida for Novelist Inc. this year, that's an industry conference. That anytime you're going to an industry conference, you're going to write that off. It doesn't matter that the conference is taking place in Florida, then you're flying down there and it's going to be sunny and it's basically taking place at a resort. You're there to learn. And that's something that you typically can write off. And there always could be extenuating circumstances. I'm not telling you on this or any other particular transaction, oh, this is how you should do it. But I'm saying this is how I've done it, this is how my accountant has said to do it, and this is how other people and their accountants have told me they do it. So, we really only find out for sure if you trigger an audit. Like all this stuff is smoke and mirrors, and you're like, okay, I think it works this way, and I think I can write it off this way, and my attorney is pretty sure, and my CPA is sure, until you actually get audited. And it's the case that, like, let's say the IRS were to audit me. They see this video, dun, dun, dun. They see that I have written off part of my honeymoon and that triggers an audit. Well, then I'm going to produce all of the research that I did. I'm going to produce all of my records. I'm going to produce all the receipts. And I'm going to say, this is how I structured it. And absolute worst case scenario, they say, Chris, you structured it wrong. Give us some more money. And I will. Because again, I'm not trying to ever cheat the government. And if you try to cheat the government, your ass is going to jail. So don't do that. Don't do that. Be on the up and up and only write off things that you can write off. But getting back to that honeymoon trip, if you saw the stack of research that I have, and if you've read the books and know how it plays a role, it was everything from taking a bike ride along a 110-degree lava shelf, where you can see this field of lava and just the heat waves coming off of it. And we actually went to a lava vent, and I could see like the mouth of hell, this orange glow within. I could see lava. Being able to do that, seeing what happened to the ocean when the lava dumped in and being told that was, I want to say sulfuric acid? Could have been hydrochloric acid? I don't know. But there was a park guide who was telling us that when the lava hits the water, it's creating this poisonous gas. And we had to be, obviously downwind or upwind of that. So that didn't, downwind? I don't know. We had to be out of the path of that so that we didn't die. And this and a million other details make it into my writing because I took this trip. And the fact that the second week of this vacation took place on Maui, where I was doing a couple things with my wife, doesn't really matter. Because I'm not writing any of that stuff off. I am paying 100% of the hotel on Maui out of my pocket. I'm paying 50% of the airline ticket out of pocket because approximately half of the trip was spent doing a couple things because it was my honeymoon. And I wanted to make sure that the IRS got their fair share of that. So if you're doing things on the up and up above board and you're documenting everything super meticulously and your attorney says it's okay and or you've got a CPA and they say it's okay, you really want to have these layers as you're getting into be a business, then you can do things like write off a part of your cable bill at home. Like if your cable is paying your internet and you need your internet to run your business, it's very possible a percentage of that can be written off, all the way up to 100%, depending on how you use your internet or if you have an external office and or a line for that business. Mileage in some cases, if you are going to a site, like I did a drive to the Grand Canyon and I was doing it as research and I documented it. And so the mileage from my house, from my front door, all the way to the Grand Canyon, that was tax deductible. I could write that off. So it's that sort of thing you want to be looking at. And what that means is ideally you set up a bank account external to yourself that is for your business. Even if you yourself are a sole proprietorship, so you haven't done any paperwork and you haven't opened anything and Amazon's just dumping money into your checking account, I would advise setting up a business, a sole proprietorship at the very least. You may not even need to create a name for it. If it's under your name, you can just open another account and then start running your money through that. Segregate your finances and try to start considering every time you open your wallet, can I pay for this legitimately as the business? And if the answer is yes, do so. And make sure that your accountant blesses that. But if they do, then you can write that off at the end of the year and save some money. This is something I didn't understand very well. The mindset shift from money to pre-tax and post-tax dollars is huge. But once you start understanding how it really works, you really do restructure all of your expenses and it starts saving a lot more money for you. My insurance and a bunch of other bills are paid by my business so that even though my salary is very low, I'm kind of making more money than I would have working for somebody else. Anyway, guys, if you have questions about writing stuff off or what I've done, let me know. Again, this does not serve as advice for you in any way, shape, or form. I am not a tax professional. I'm only relating things that I have been told by mine. And even that, since it is hearsay, you've got to take it with a grain of salt, guys. If you hear something and it doesn't sound right, take it to your account and be like, you know what, I'm not real sure about this. And don't ever do something that doesn't feel kosher to you. If your accountant recommends, hey, you can do this and it'll save some money and it feels weird to you, don't do it. Don't do it. Trust your gut. But there's no reason you can't do everything above board and save a bunch of money in expenses that you are used to paying out of pocket. Things that we, for our entire lives as wage earners, are just conditioned. This is something that I have to pay, like my cell phone bill. Well, now your business might be able to do that for you. Again, if you have questions or comments, please post those below. I desperately need to get back to the writing. I am knee-deep in Nefarious, which is going extraordinarily well, but I'm way behind schedule. And then I also need to finish polishing the course because that's going to go live. That's Ads for Authors Who Hate Math. So doing the final recording on that. We've got a few more days of that. The Discord went live to the early access crowd, and we're kind of starting to populate that and ask questions and shred ads. So all the infrastructure is kind of in place. It'll be a busy week or two, but once that stuff's all dealt with and I'm on the other side of it, it'll be worth it, and I'll be back to just writing. So anyway, back to the writing. See you guys next week.